This is Eric Mwatha with Mwatha.com. Today we are seeing the markets pull back slightly, down about 0.5% on all the major indices. Now if we take a look at yesterday's hourly chart, as I pointed out on Twitter, it looks like the hourly charts, and this is yesterday's chart that I used, we were forming this nice big wedge here, and I pointed out it seemed to me that there was going to be hourly resistance, because the market was testing these previous highs in price. Also, we see that the RSI was forming this resistance level, so it seemed like there was going to be market stalling here, at least briefly, and then we'll see what happens down the road. Now that was yesterday's chart. When we look at the current chart right now, we see that the market is coming off those highs here and also now outside this wedge formation. So that pullback is now in place. How much lower it's gonna go, who knows? But what we can see also here is that now the RSI is confirming negative divergence, where we see the market was making an all-time high on the S&P 500, yet we see that there was declining technicals here. This usually is reason for markets to go down, at least short term, and maybe the beginning of a bigger move. The dailies and the weeklies and the monthly charts are going to determine the size of the move to the downside. If we take a look at yesterday's NASDAQ closing price, the chart on the daily shows that the market was forming this higher highs here, with the market moving the NASDAQ to 12.5-year highs, and yet we see that the technical picture was stalling here. And more importantly, the fact that the RSI was trading below 61.8 on the daily. So that resistance level with a negative divergence on the daily is a reason for this market to stall. Now that was yesterday's closing chart. If we take a look at today's chart, we see that the resistance is being confirmed right there, which confirms this price or RSI highs resistance. Notice that the price was making higher highs. As I've been saying, technicals are making lower lows. That could be setting up for a market that wants to go down. Yesterday's close, S&P 500, at the close here, closing at all-time highs, very close to 1600, and you see again making higher highs on price, but the technicals were making lower lows. More importantly, we see that we did not move above 61.8 on the daily RSI, and now we have this negative divergence right there, confirming that this could be setting up for a move lower. As of right now, we see that the market is now, today's chart, we see the reflection of that resistance as it hit that line there and is now pulling back, as you can see right there. So that is probably setting up for a market that wants to pull back, and we'll see over the next couple of days and weeks how significant this pullback is. Yesterday's closing chart for Apple, we see it moving above the 50-day moving average, which is a fast move above the 50-day moving average in a while, ever since this failed attempt here. But really what was more telling as far as I'm concerned is the fact that now the RSI was moving back to this level here. Now this level is significant because that was the break point that began this big slide, and that break point was at that level there. So the RSI confirmed a break there, and so we've hit this level once before, which was this level here, which was that level, and we moved to fresh 52-week lows, or actually fresh multi-month lows, and so we've come all the way back, hit that level. So as of yesterday's close, it seemed like if you are watching that this instrument would pull back today, and as you can see today it's down about a percentage point, and this percentage point is now coming at this level here where we would expect resistance. Now the only way this stock moves higher is if it can break out above that level. As of right now, it is confirming resistance, so until it breaks out, seems to me that this is the beginning of a pullback that is going to push this instrument lower over many weeks and days. If you take a look at the chart for the GLD, yesterday's closing chart, you see that this is an area where you'd expect resistance, because once we broke down here on the RSI, that corresponds to this initial break in gold, and then also corresponds with this attempted failure here to move higher, which is that high, and then you had this plunge. So we worked our way back to that level here, which is this level here, break level. And if that was a closing price as of yesterday's close, you know that the possibility of a pullback was very high, because this is where it's been stalling. And as you can see today, now today's chart, gold is down about 2.2%, because now it's confirming that was resistance, and now confirmation of resistance there. The suggestion to me here is that more than likely the possibility of breaking below these lows here and making a fresh 52-week low is very high. Why? Because the RSI is now breaking that trend. If you take a look at the chart for silver, same scenario here. You had multiple levels of resistance. This is yesterday's daily close, and you can see it closed exactly at this RSI highs line. So there was one level of resistance from that level, and then also another level here where it's been stalling. It's been stalling at this level here. Let me remove that so you can see. And why is that level significant? Because this was the break point there, which corresponds with this break right there. So we know that if we stall here, we make fresh lows. So we stalled here, which happened to be this level here, and then we move to fresh 52-week lows. We stalled here again, which is that level, and then we had a plunge. And so we have two levels of resistance here. We have top lines resistance on the RSI, and then also we have this level, sentiment resistance. If that is the case, then we see that the resistance was going to mean that more than likely we get a pullback in silver, which is precisely what we are getting today. As you can see today, silver is down close to 4%. Again, the RSI was confirming that there was going to be resistance there, and also RSI top lines resistance. That's why we get this push lower today. Now, the only way you want to play this instrument, or if you really want to play it perfectly, wait for a breakout above that level, which is this declining RSI top lines. Wait for a breakout above that line, and also a breakout above this line. Then silver might be in play. For now, you don't want to touch it, because it means that more than likely we are going to be moving to fresh 52-week lows as far as the silver charts are concerned. If we take a look at the GDX, again the RSI was showing this is where you'd expect resistance from the RSI top lines. This is yesterday's closing chart. There was resistance from that top line, and also from this break level here where we broke down here. We've not been able to move above those two levels over many weeks, so that was going to always offer resistance. And as you can see today, that was being confirmed with about almost a 4% pullback in the GDX, because there was going to be resistance there from that level there, and also from the RSI top line. So self-evident that this pullback today is consistent with the RSI price action. If you take a look at Facebook, just to finish here, you'll see that also it had broken down there, which corresponds to that high. And so we've noticed that we've hit this level once before, which is there. So this level here has been a level of resistance. So we've hit that level there once, which was that high. And as of yesterday's close, we right there at that resistance line. So which makes sense that today we are looking at Facebook pulling back about a percentage point and confirming that there is resistance at that level. The best way to play this instrument is if you get a breakout above this RSI level that has been proving very difficult to break out for this instrument. So a breakout above that level, the instrument is in play. But for now, today's action shows that we are looking at resistance. So this might be the beginning of a pullback as far as the stock is concerned. Again, we just have to wait for the markets to break out for us to play the upside. For now, looks like early signs of resistance as we begin the new month. This is Eric Muathe with Muathe.com. Use some caution, peace, and blessings.